Definitely the signature characteristic of this calendar year is going to be commodity and input cost inflation. It's coming across many fronts. Agricultural commodities have doubled in cost. Petrochemical commodities are up. Packaging materials, freight, distribution, energy. So it's very widespread, these inflationary pressures. Now, our first reflex when we see that is to look for savings. Where can we find efficiencies and take cost out of the business? It's a last resort to go to pricing, but in these types of circumstances, we will be taking and are taking substantial price increases that you saw in our Q4 results. We're not prepared to underinvest in the long-term health of the business, so we will continue to invest competitively in things like R&D and brand support, in capital expenditure. And because of that, our margin will dip in 2022. But we've also accompanied that by saying we expect it to fully recover in 23 and 24, with most of it coming in 2023. So this is really a margin dip that's rooted in our determination not to underinvest in the business in a period of high commodity inflation.
What gives you the visibility to make that call that we will see a restoration of margins in 2023, 2024?
Yeah, well, we can see very heavy inflation in the first half of this year. We've explained that we see about 2 billion euros of on cost in the first half. At the moment, we forecast 1.6 billion euros in the second half. So already we've got some visibility on commodity costs moderating in the second half. And when we look at the underlying drivers, it appears that it will taper off towards the end of 2022. But I don't want to give too hard a forecast because we are living in uncertain times. So as well as having a point of view in 2023, we have a bigger point of view that staying flexible and agile in these types of uncertain times is very, very important.
You faced quite a strong backlash among the investment community over your pursuit of GSK's consumer health unit a couple of weeks back, because many investors felt that the business hasn't delivered organically over the last few years. Why did you think investors would back this deal?
Well, first thing I would say is that the vast majority of people in Unilever spend all of their time running the wonderful business that we have today. But it is the responsibility of the board to think about the long-term direction of Unilever's portfolio. Health and well-being and beauty are very attractive categories with good long-term prospects. And we'd studied this opportunity very, very carefully. Also confident, I must say, based on the types of results that we're reporting today. Nevertheless, we have listened carefully to our shareholders. There's no appetite for a deal the size of GSK Consumer Health. We don't intend to pursue these types of transformational acquisitions for the foreseeable future. We've been unambiguous. We've drawn a line under that deal. It's off the table. We're very resolved on the portfolio direction around health and well-being and beauty, but we're going to be more measured in how quickly we get there.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.